Then there's also how the community responds and how people respond to these times of disaster.
Now, has the earthquake made it more expensive, Derek, for the government to go and to borrow more money internationally?
Oh, I think the international pressures really haven't changed. I mean, the marketplace worldwide is obviously far greater than the New Zealand impact. And so for the government offshore, it probably hasn't made that much of a difference at all. But we have actually seen, the bond rates in New Zealand actually lift a little bit as people think that the Earthquake and War Damage Commission is going to need to be selling bonds to raise more capital to finance it.
Derek, we know that our foreign debt is incredibly high in this country. Is that a worry?
Well, in fact, our foreign debt is actually not that high compared to other countries. And so when you actually look at a grid of various countries, we're actually at the low end of the scale. So people actually regard New Zealand as a very safe place to invest.
And yet it's 90% of our GDP. Doesn't that set off any warning bells for you?
Well, on the other side of that, you've actually got a lot of assets. I mean, you've got to remember that when you talk about those numbers, a lot of those numbers are actually private sector. The market internationally worries about the government debt. And the government debt is running around that 30 to 32% of GDP. And internationally, some countries are in the 100 to 200% GDP. So we're at the very low end of the scale.
Having said that, though, we now know that the government's had a savings working party, and they've just met this week. What advice would you give to them, Derek?
Well, I'm a fan of compulsory superannuation. I just look
You
at,
are?
I am. I look at the way that Australia has actually done it, and I think we should be emulating them. So that's really, it's a very complex area, but that's where we should start.
Gee, I wish that somebody at South Canterbury Finance had done a little compulsory saving over the years. We now hear that the farmers, for the first time this week, are going to know, those who put money into it, where they stand. How are you feeling about SCF this week?
Well, I mean, I guess there's still a lot of things to work out. The receivers have made it quite clear that they, they're not going to see a fire sale of all the assets. The government would preferably want to see the whole entity sold at once. Whether that's going to be possible.
But Derek, are you picking that anybody's going to come up and buy up what's left of SCF in one fell swoop?
It's debatable. I think if they can find a buyer, then they are obviously actively looking. But the good thing about the government taking over, all of the responsibility for it, is in the long run, they actually have time. Governments can wait. And as has been pointed out, of the total payout, there's something like about 1.1 billion worth of actual assets in there which are still performing. I don't think it's actually going to be anywhere near as bad as the initial figures would indicate.
In fact, the government is now saying, James, that it's gone down to about, $300 to $400 for each Kiwi. Is this a bargain as far as you're concerned?
Well, I wouldn't say it's a bargain, but the taxpayers have to, fronting up. But when we talk about the $1.67 billion bailout package that the government's really put forward, then a lot of that is going to be recovered, as Derek's pointed out, by sale of these assets. And it's important that a lot of the rural assets in there are actually performing pretty well, and that's probably not such a bad part of the South Canterbury Finance book. It seems like it, at least in some of these reports. So I guess in terms of the money that the taxpayers are going to have to front up with, and that's going to have to be it's going to be a bit smaller. And also, John Key has pointed out that once they recover the fees from the banks and some of the other institutions from the government guarantee scheme, then that impact's going to be even smaller to the taxpayer. So when the guarantee scheme came into place, then a lot of the institutions had to front up with some massive fees initially to take part in it. So that's going to come back to the government also.
Derek, the question I've had all along about South Canterbury Finance is that from 2008 to 2009, there was some really reckless spending, we now know. The company went way beyond what it normally did. It was no longer the heartland of the South Island. They were buying up bars and Auckland hotels, and yet nobody from the government seemed to be keeping an eye on them.
Well, I think you've got to remember that the government had bigger issues to worry about. We had the global financial crisis, and at the end of the day, they were more worried about stability in the banking system. So what that has actually meant is that they've actually finished up guaranteeing people that maybe they shouldn't have done. And there's the moral hazard. Once you actually have a government guarantee, you still feel more free to lend to people that maybe you shouldn't do. And there are signs that maybe the internal management within that company wasn't the best either. So there are a number of factors that came together. But really, there's been a lot of criticism around the government scheme because there were companies put in there that maybe shouldn't have been.
Gentlemen, thank you very much. Coming up, what's up with growth in farm lending by banks, the latest word. But first, a question for you in our Farmers Facts and Figures quiz. How much money have banks loaned to farmers for the year ending in June? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much money have banks loaned to farmers for the year ending in June? The answer, $46.1 billion. Now, bank lending to farms is down for the second consecutive year, largely because of the credit crunch and falling dairy prices. James, is this likely to change soon?
I think it's probably not likely to change too soon. I think there has been probably a lot of consolidation over the past 12 months. Particularly in the dairy sector, where a lot of that lending is about 65% of lending in New Zealand is into the dairy sector. Then dairy farmers really had a big fright. 12 months ago, the payout was at $4.55. Potentially could have gone lower. And they were probably underwater at that point. They sort of got out of jail a little bit with dairy prices really skyrocketing through the past 12 months, and currently last year's payout sort of sitting at over $6. So they have really consolidated. They're repaying debt. They are taking a fairly conservative approach. There's not a lot of farm sales going on at the moment. So unless there's a big demand for lending, then it's probably not going to change too much in the near term.
Derek, how are we doing here in New Zealand? A snapshot, if you would, with your expertise. How are we doing compared to other countries in the world, and how bad is it out there?
Well, I think to put it in if you like, earthquake terms, we had a major earthquake 2 or 3 years ago, and we're still going through aftershocks. We had another one in May, June with Greece and Portugal, and really Greece hasn't gone away, Ireland hasn't gone away. This week the European community is worried about those countries, the stress tests on the banks, and America still has a lot of very poor data. So China is growing. Japan's got some major issues with the Japanese yen. The world is still a very twitchy place. And that's why I think authorities all over the world are on hold as far as interest rates are concerned, and governments are making sure that they don't scare the horses. They're actually trying to make sure that things are calm and that they're responsible, and that's the front that everyone's trying to make sure that we don't get upsets.
So it's like playing a great game of poker. You got to put your poker face on, no matter very calm on the surface, but you're pedaling like mad underneath.
Well, look at Alan Bollard's book recently, commenting on how calm he was and, out there because he had to be, and yet behind the scenes he was very worried about a number of things.
Gentlemen, we have a new Prime Minister officially across the ditch. Looks like Ms. Gillard takes the race. What's it going to mean for the economy there and for us?
Well, I think it's interesting because there's no one party that's had a clear vote. So when there's sort of a minority, then it means that they aren't able to make the real clear decisions on their growth and things like that, and where they're going to take things. So that might have a bit of an impact over a more longer term basis. But the Australian economy is steaming ahead pretty well at the moment, and for us, in terms of the currency, then we probably have been sort of riding on the back of them a little bit to our detriment, I suppose, over the past year.
Of course, a big part of the deal to get Gillard back into office was I think a $9 billion package she's now giving to the rural sector over there. What should we be thinking here, watching what's going on in Australia, Derek?
Well, pork barrel is back in Australia. They need the numbers, and so they're going to be throwing money where the votes are needed. But I think that they've got real gridlock over there. They're not going to be able to do anything too major. And so it's a bit like Clinton when he was facing a hostile Congress. Not a lot happens. So I think government's actually the problem in many cases, and so them getting out of the way is a good thing.
And the American president now is going back to a huge infrastructure deal to try and stimulate the American economy. They're going to be working on what? The roads, the airports, the train system. What do you make of that?
Well, I don't know. This was the sort of talk that we had after the global financial crisis. This was where they were going to spend all this money on bridges and railway and roads and so on. That was 2 years ago. So I don't know. I think he's in election mode, and they've got the midterm elections coming up soon. So, yeah.
And it's kind of interesting here in New Zealand when there's announcements made in the US, and in some ways the earthquake is going to provide some stimulus to the economy. The risk is, of course, that when the government throws money at the economy, then there might be some overcapacity, but there won't be in this case. So that's going to be good news for New Zealand.
Gentlemen, thank you so much. Entertaining as always. Thanks to my guests, ASB Rural Economist James Shortall and Financial Advisor Derek Rankin of Rankin Treasury. We'd love to hear your feedback, so drop me a line on our website. And remember, check out my weekly blog. We'll give the last word to Dale Peterson, who's running for public office in Alabama. He wants to be the state's next agriculture commissioner. Over there, taking care of the farmers and the land is serious business.